Right, so those are the headlines that we're tracking this evening. You're watching CNBC TV 18, and this is Reporter's Diary. So it was yet another choppy session on Dalal Street with key indices moving in a tight range. The Sensex and Nifty ended with minor gains as investors remained cautious ahead of the RBI monetary policy, which is on Thursday. Now, Nifty is up by 22 points and the Sensex is up by 34 points. The mid-cap stocks, though, underperformed, with that index ending with a loss of 130 points, while the Bank Nifty saw support from a select few stocks to end with gains of 85 points. And with the fiscal year drawing to a close in 50-odd days, the government is stepping on the gas to shore up the coffers. In a written response in Parliament, the government has confirmed that it has asked the RBI to pay the untransferred surplus for the last 2 fiscal years. The government has also chalked out a roadmap for dividend from the RBI for FY20. Sapna Das is here with more on that. Sapna, can you tell us about the centre's demand from the RBI?
Well, it's official. So first point, as you've rightly indicated, that for the previous financial years, that is FY17 and FY18, the government has asked for transfer of the untransferred surplus from Reserve Bank of India. The numbers are in public domain. They have been tabled in the Parliament as well. So there the numbers are 13,000 crores for 16-17, kind of untransferred surplus, which is what the government is saying, and for 17-18 it's 14,000 crores. So if you look at the interim dividend expectation for FY19, that is the additionality that will come through, apart from the 40,000 crores which has already been paid for this financial year by RBI. Well, that's a number of around 28,000 crores, but I suppose that will factor in 13,000 crores worth of untransferred surplus from RBI for the financial year 16-17. This is at least how the government is estimating the entire, interim surplus or surplus transfer from Reserve Bank of India. Similarly, for FY20, the estimate broadly from the government side is 69,000 crores as dividend from RBI, and I suppose this 69,000 crores would also add up, would also include the 14,000 crores worth of untransferred surplus for financial year 17-18, which we have already spoken about just now. So then the tally goes up to 69. So if you remove these surplus transfers, or the number is somewhere around that. We really don't know, what call RBI will take and how much they will actually transfer to the government, be it full dividend for next year or, interim surplus. So then the number actually comes to a lower amount. So the point that we are just trying to make is 13,000 crores untransferred surplus for 16-17 to be added probably in this year's interim dividend demand, and similarly for next year's budget estimate also, the untransferred surplus for 17-18 or 14,000 crores probably has been already factored in the budget estimates.
Right, Sapna. What about the government's plans regarding using that unused compensation cess? What's the update on that?
Well, our understanding is this, that if you look at the the budget numbers, a small point there, like a lakh crore is the estimated shortfall for FY19 in the revised estimates for CGST. Probably the government has gone ahead and used the unutilized compensation cess money of 29,000 crores, to bridge this gap. So probably the gap has already been brought down to 73,000 crores, and then plus they have raised the direct tax target by around 50,000 crores. So this is how the GST shortfall has been taken care of. But the important point here is that the government had amended the compensation cess law last year itself in 2018, sometime in August monsoon session, which clearly said that any unutilized compensation cess amount will be shared 50-50 between the central and states at any point in time during the year. Earlier it was after the period of 5 years comes to an end. So that's an important indicator. Probably, in future also, if there are shortfalls, then this is one mechanism, that can be utilized to balance the budget. So the revised estimate is lower by around 1 lakh crores for CGST collections, the centre's collections. We have to wait and watch and see what really happens on that revised estimate by 31st March.
Right, Sapna, absolutely. Many thanks for bringing us all those details from there. So there you have it. That's the calculation as far as the budget shortfall is concerned, how the government intends to make up for that shortfall. But in a bid to make ratings agencies more accountable, especially after the IL&FS saga came to light a few months back, government officials have held talks with market regulator SEBI, and the new rules could be similar to ones that are currently in force for auditors. Timsy Jaipuria is here with the details from there. Timsy, what could these new rules be?
Well, that's right. Market regulators SEBI and Finance Ministry are in discussions to tighten the rules and regulations that regulate rating agencies. What I pick up from sources right now is the fact that Finance Ministry has asked SEBI to submit suggestions with respect to rating agencies within a month. And FinMin has also told SEBI to suggest changes which can be moved as amendments in the SEBI Act. Now, these amendments, these suggestions would be basically to have more accountability, more responsibility and more transparency when it comes to the credit ratings that these rating agencies endorse. So government feels that, and not just government, even SEBI feels that rating agencies should have more responsibility towards their ratings, and SEBI is likely to look at more stricter penal actions while reworking these rules. SEBI board members are pushing for transparency and accountability, and with the new rules coming in, government feels that just the way they have now started governing auditors under the new Companies Act regulations by creating a new authority called NAFRA, under SEBI itself, they would want such sort of rules that can govern and regulate the rating agencies, their ratings that they give, to try and ring fence and give more accountability and responsibility to the ratings that they endorse. Let's see how soon this happens. Back to you.
Right, Timsy. Thanks for getting us that information. But talking about ratings agencies, Moody's has downgraded Bharti Airtel's unsecured senior notes to non-investment grade with a negative outlook. Now, remember, Moody's had put Bharti Airtel on review for a downgrade on the 8th of November, and the agency had cited uncertainty regarding sustainable improvement in profitability, cash flow, as well as debt levels on one of the reasons for that downgrade. Now, the agency has also said that the rating outlook could stabilize if the credit profile strengthens. However, investors have shrugged off those concerns, and the stock ended the day in the green. In fact, let's hear out what Sunil Bharti Mittal, chairman of Bharti Enterprises, had to say on the concerns regarding deleveraging. This is when he spoke to Shireen Ban last month on the sidelines of the World Economic Forum in Davos. Let's hear out those comments.
First of all, Africa has already raised pre-IPO money, $1.25 billion, which has gone to deleverage. The $5 billion debt, we are in Africa down to $3.7 billion, out of which $700 million is FLO for towers, which is not a real debt to be repaid, but just to be adjusted over time. So $3 billion debt there. At some point in time, 2019, we will have our IPO.
It was expected in the first half. Is it now been pushed to the second half? Is that the expectation?
Can't say. I think some pre-road shows are in the offing in the coming weeks. I would say we should stay to our schedule.
Which is the second half?
No.
Or the first half?
It would be in the middle.
In the middle, okay.
We always said June, July. We never had said, I don't know, there were some reports that we'll do it early in the year. There's an election in Nigeria happening in February. There are one or two other political development, and then we have to have March closing. So it is always June, July. It was never February, March.
Okay, so June, July is the expectation. What's the expectation on valuation given the fact that you did pre-IPO around at 1.25 billion?
Yeah, so take that as a, I would say, lead into the valuation which some private investors have given. Now, depending on when you arrive at that point in time, what are the performance metrics in Africa, how are the markets, it will all be decided at that point in time.